Tonight, we witness a milestone, one that will be remembered for generations to come, a moment that marks a dramatic turning point in the story of global trade. This event will echo through economic history, reshaping the way nations think about commerce, competition, and cooperation. For the first time ever, a single nation, China, has achieved a trade surplus exceeding $1 trillion in a single year. This staggering figure is more than just a statistic. It's a symbol of China's growing influence on the world stage. This isn't just a record, it's a seismic shift in global commerce, a transformation that will ripple across continents and industries. The implications are profound, affecting everything from the price of smartphones in Ohio to the future of factories in Germany, and even the livelihoods of workers in distant corners of the globe. China is exporting far more than it imports, creating a tidal wave of goods that is flooding international markets and leading to a massive imbalance in global trade. This isn't just about cheap products anymore. It's about high-tech electronics, electric vehicles, advanced machinery, and the cutting-edge innovations that are shaping the future. The achievement challenges the very foundations of the post-war economic order, forcing tough conversations in Washington, Brussels, Tokyo, and beyond about how to respond to China's economic might. Years ago, a US-China trade war aimed to curb China's rise with tariffs and restrictions, hoping to slow the momentum of its export machine. Instead of faltering, Chinese exporters adapted with remarkable speed, finding new markets in Africa, South America, and Europe, and developing innovative strategies to thrive in a changing world. This trillion-dollar surplus is the unexpected outcome, a testament to resilience, strategic agility, and the relentless drive of Chinese businesses to succeed on the global stage. Tonight, we'll unpack how China accomplished this feat, what it means for workers and businesses worldwide, and how it could reshape the global economic landscape for years to come. This is more than just a headline. It's a turning point that demands attention from leaders, analysts, and everyday people alike. It's good news for a factory worker in Shenzhen, whose job is now more secure and whose future looks brighter than ever. But it's a source of anxiety for competitors in South Korea, for policymakers in Washington, and for industries around the world that now face stiffer competition and new uncertainties. The world now faces a new reality, a global economy where one country's exports have built a trillion-dollar wall of trade, reshaping alliances, supply chains, and the very rules of the game. The question is, what happens next? How will nations respond, and what opportunities or challenges will arise from this unprecedented shift? Stay with us as we explore the forces behind this historic moment and discover what the future may hold for the world economy in the wake of China's trillion-dollar triumph. To grasp the scale, let's look at the numbers. China's exports have surged past $4.1 trillion this year, an unprecedented volume of goods shipped worldwide. Meanwhile, imports have lagged, totaling just over $3.1 trillion. This gap is the very definition of a trade surplus, exporting far more than importing. For China, it means a net inflow of wealth, strengthening its global financial position. For the world, it's a historic imbalance. One country meeting global demand to an extraordinary degree. This creates dependencies and vulnerabilities on both sides. China relies on foreign markets. The rest of the world faces fierce competition. The trillion-dollar question, is this imbalance sustainable or a prelude to greater economic conflict? The answer will shape the next chapter of global trade. Let's dive deeper into how this surplus was built. The story starts with a trade war and a remarkable pivot. The trillion-dollar surplus story begins with the US-China trade war, a turning point that would reshape global commerce. When the US imposed sweeping tariffs on Chinese goods, many experts predicted China's export machine would grind to a halt, expecting a dramatic collapse in overseas shipments. But instead of retreating, Chinese exporters pivoted quickly, seeking out new markets and re-engineering their products for Europe, Southeast Asia, and Latin America, turning challenge into opportunity. Thousands of entrepreneurs adapted almost overnight, shifting their focus from low-end goods to high-value products like electric vehicles, solar panels, and advanced electronics, investing in innovation and quality. This strategic move up the value chain made Chinese exports more resilient to political pressure, allowing them to weather the storm of tariffs and trade restrictions. As a result, global trade routes shifted dramatically. Fewer goods headed to Los Angeles, while more shipments began flowing to Rotterdam, Singapore, Sydney, and other global hubs. US tariffs, designed to isolate China, instead pushed it to integrate even deeper with the rest of the world, forging new partnerships and expanding its global reach. The key lesson for Chinese exporters was clear: never rely on a single market, no matter how large or lucrative it may seem. Diversification became the foundation of China's export boom, spreading risk and opening doors to new opportunities across continents. The result? A trillion-dollar surplus built on agility, relentless innovation, and strategic adaptation to a rapidly changing world. Western policymakers were caught off guard, underestimating China's ability to adapt and thrive under pressure. China's exporters didn't just survive, they rewrote the rules of global trade, setting new standards for resilience and flexibility. The world's supply chains would never be the same, forever transformed by China's bold response to adversity. As the US market narrowed and American demand slowed, Europe and Asia quickly emerged as China's new export frontiers, opening up fresh opportunities for growth and expansion. European nations, eager for affordable green tech and clean energy solutions, became major buyers of Chinese batteries, solar panels, and essential components, fueling a green transition across the continent. Ports like Rotterdam and Hamburg saw surges in Chinese goods, fueling Europe's own industries and supporting jobs, as Chinese products became vital to European supply chains. In Asia, ASEAN countries surpassed the US and EU as China's largest trading partners, reflecting a dramatic shift in global commerce. Years of economic diplomacy, including the ambitious Belt and Road Initiative, paid off, connecting China to new markets and partners across the region. Supply chains across Asia became tightly integrated, with China at the center, orchestrating the flow of goods, technology, and investment. The China Plus One strategy moved some manufacturing to neighbors like Vietnam and Thailand, but core components and expertise still came from China, keeping it indispensable. Australia's vast resources, especially iron ore and minerals, fueled Chinese factories, deepening economic ties and mutual dependence. The result? A new global trading axis, with China as a central hub, connecting continents and reshaping the flow of world commerce. While the US focused on decoupling and trade barriers, China built stronger links with Europe and Asia, forging new partnerships and agreements. The trillion-dollar surplus reflects this new, multipolar economic world, where influence and opportunity are spread across many regions. The US is no longer the only customer that matters. China's reach now spans the globe, with new partners shaping the future of trade. The other side of the surplus is China's weak imports. Economic uncertainty and a struggling property market have made Chinese households cautious, dampening demand for foreign goods. Private companies, wary of unpredictable policies, have held back on big investments. Government stimulus has focused on production, not consumption, supercharging exports, but not domestic spending. The result: high savings rates and low enthusiasm for imported goods. For global producers, this means fewer opportunities in China and more pressure at home. China's trillion-dollar surplus is as much about what it isn't buying as what it is selling. China's export wave brings cheap goods to consumers worldwide, keeping inflation in check. But for producers in Europe, the US, and beyond, it's a flood of competition that's hard to match. Factory closures and job losses spark political backlash and new trade barriers. The US and EU are responding with tariffs and anti-subsidy investigations. Global supply chains are fragmenting as countries seek to reduce reliance on China. Investments are shifting to places like Mexico, India, and Eastern Europe. The world is dividing into competing economic blocs. China's surplus is reshaping the global order. China's currency, the yuan, has weakened as Western central banks raised rates. A weaker yuan makes Chinese exports even cheaper for foreign buyers, fueling the export boom. This isn't classic currency manipulation, but the effect is the same: a stealthy subsidy for Chinese exporters. Policymakers in Washington and Brussels face a dilemma. Market forces, not direct intervention, are driving the yuan's decline. For China, a weak yuan boosts exports but makes imports pricier, further suppressing domestic demand. It can also trigger capital flight, but for now, the benefits outweigh the risks. The weaker yuan is a key ingredient in the trillion-dollar surplus. The world is watching closely. China's trillion-dollar surplus puts the world at a crossroads. Beijing can double down on exports, risking more global friction and protectionism. Or it can rebalance, stimulating domestic consumption and shrinking the surplus. For the US and Europe, the choice is between escalating trade barriers or negotiating new global rules. Tariffs may protect some industries, but risk higher prices and trade wars. Multilateral reform is slower, but could preserve the benefits of global trade. The decisions made now will define the next era of globalization. Will the world choose confrontation or cooperation? The stakes couldn't be higher. The next moves will shape the global economy for years to come. 2025 will be remembered as the year China's trade surplus crossed the trillion-dollar mark. This is more than a statistic. It's the start of a new chapter in global trade. China's export machine has reached its peak, but the world is now dangerously out of sync. The trade war made Chinese exporters stronger and more diversified. The result? A surplus too large to ignore, and a global system under strain. The future could bring escalating trade wars or a push for reform and cooperation. The old rules no longer apply. A new game has begun. The world is watching to see which path we choose.